Hello there, this is Justin Schauers, the principal broker here at Home Basics Real Estate. I sell with my twin brother Jared. We've been in business since 1999. We've sold over $175 million worth of real estate, and we've seen great markets, we've seen bad markets, and everything in between. Utah right now is experiencing an awesome market. It's a seller's market, but there's also some great perks for buyers as well. And so with that, we thought that it would be really important for us to share with you some of the ways that you can compete as a buyer, especially if multiple offers come in on a property. And obviously, it's a sort of an obvious statement. You want to try to avoid multiple offers in the first place by being Johnny on the spot. If you can be one of those buyers that when we send you a property, and sometimes we send them to you within an hour of them coming out, if you can arrange your schedule to get out there, we see the property, you like it, we write up a very good offer that the seller can't refuse. Once in a while we can avoid a multiple offer situation, but the reality is most homes, good homes that are priced well, will attract multiple offers. You have a 36-hour, maybe 48-hour window of opportunity that you've got to get a place at the table. And so we want to talk to you today about that. I'm going to refer to some notes because this is going to be a little bit long, a lot of great information, okay? And I want to say that multiple offers are very common, even up to about 600,000. I mean, we're hearing about multiple offer situations in that range as well, and we've actually experienced that. So how can you craft a very attractive offer? Well, first of all, multiple offer situations, it's kind of like a card game, and there's so much that's unknown. And so we should always start out by asking a lot of questions. And most listing agents aren't going to tell you exactly what you need to know, but many of them are willing to offer some clues, and others, a few, are willing to squeal like little piglets. I hate to say that about our industry, but I'll tell you, you can get some listing agents to really open up and tell us some things that we need to know. They shouldn't be telling us that, but it can be very helpful when we're representing you as a buyer. It's not just information about the sellers that we want. In a multiple offer situation, we want to know about the other offers. And really, a listing agent should be treating all parties fairly and shouldn't be telling us this information, but I think there's some questions that we can ask that they usually feel comfortable answering. Now, first question is, how many offers are we competing against? Multiple offers, what does that mean? Are we competing against 2 others? Are we competing against 5 others? And we need to know that. I think that's invaluable information because there's different strategies involved in both those scenarios, okay? I like to ask the listing agent if they're representing any of the offers that are on the table. In other words, are they acting as a limited agent, representing both the seller and the buyer? And they don't have to answer that question. And in this market, it's a bit unavoidable. When we put a sign in the yard and get it out there and do a social media post, whatever, we do get phone calls as listing agents, and there are some parties that come unrepresented. And I have no problem with that, but there are some different strategies involved, and we should know if the listing agent is representing one of those multiple offers. Are any of the other offers cash? It's hard to compete against cash, okay? I've seen sellers give a $10,000 discount for a cash buyer. But why should you do that? Is the cash buyer going to close you tomorrow? Or is it just like any other deal where it's 30 days? If I'm a seller, I'll wait for a much higher offer if it's a financed offer so that my net is a lot better. But you should know, or I'd like to know as an agent, is there a cash offer on the table? Okay? Are any of the offers from investors? I can tell you that many sellers view offers from investors very, very differently for a number of different reasons. Something else to consider. Let's say that we have a conventional buyer. Let's say you're a conventional buyer and you've got 20% down. I like to ask the listing agent, are your other offers FHA offers, 0 down offers? Because, it just worked the other day. We were competing against what ended up being an FHA offer. I asked the listing agent, he told me. He was very, very helpful. He saw the value in having a conventional offer because it was an older home. And, I started to put some doubts in his mind, and he probably knew it anyway, that if he accepts an FHA offer, they could probably muscle through that, but the appraiser would go through there and require that certain things be done to the home to make sure that it's financeable, whether that's peeling paint or a cracked window, etc. He saw the value in a conventional offer, and so he was willing to tell me a little bit more about that situation. Okay, sometimes we just flat out ask what the highest offer on the table is right now, and you'd be surprised at the answers that we've gotten over the years. I mean, A listing agent can make us feel pretty stupid for even asking that question. And I don't mind asking the stupid questions, okay? We have some agents who will just tell us where we need to come in at. And I just can't believe that. It's not very fair to all parties, but I'll tell you, I'm willing to ask, so if we're willing to ask the listing agent, sometimes they'll let us know. After asking about the offers, we also like to ask a little bit more about the seller, right? What other terms are the seller is looking for? In other words, is it all about price to the seller? I can tell you from years of experience that for many sellers, it's not all about price. So then what is it about? How do you make your offer really appealing other than just offering the highest price? Now let's start from the very beginning, and that is choosing a loan officer. I'm going to strongly encourage you and recommend that you visit with our preferred loan officer, Keith Snow with Security Home Mortgage at 801-367-4663. That's 801-367-4663. When I present a multiple offer, or one of multiple offers, I like to tell the listing agent, my buyers are qualified with my preferred loan officer that I've done business with for 15 years. He's never let us down. If I have a problem, I walk over to his office and we solve it together. We are constantly coordinating on these deals. It's music to my ears when I'm on the listing side, and a buyer's agent can say that. You may also want to get not just a pre-qualification, which is kind of lazy and pretty easy to get, but an actual pre-approval. If I can go to the listing agent and say, I've already got these guys pre-approved, that means something to them as well. And it takes a little bit of extra effort on your part and the loan officer. Other factors to consider when competing, okay? First of all, offer serious earnest money. I am tired of people bringing us an offer on a home that's listed for $300,000 and they've only offered $1,000 earnest money. If I like everything else about that offer, I'm going to encourage my seller to still counter just on earnest money. Earnest money to be $2,500. And the problem is that actually keeps the deal open. So if you're a buyer, you should know if you get a counter offer, if another offer comes in, the seller can move on from yours. They can retract that counter offer. All they were countering was your earnest money. It speaks volumes about a buyer if they post more earnest money. It's part of your down payment. It's completely protected as long as you work within the deadlines of the contract. Offer serious earnest money, okay? Be careful in your inclusions. I can't tell you how many sellers I have worked with that just love their refrigerator and they want to take it with them to the next house. I know it's dumb. Don't mess with the inclusions and exclusions. If they want it excluded from the sale, give them what they want. We're not going to squabble over some of these minor issues, but I have seen it come down to, well, the refrigerator is a $1,200 perk. Okay, it's a used refrigerator, but they would have to go buy a brand new one. So it does mean something to the seller, right? Listen, this is a huge one, and that's your down payment capabilities. If I have 4 offers come in and one of them 0 down and one of them is 20% down, I'm going to really look at that 20% down offer because it speaks volumes about the buyer. It really does. In fact, if I had $100,000 at my disposal to potentially put down on a property, I'd put $100,000 down. And then when we get it under contract, I'd go to my loan officer and say, what makes the most sense? And he might say, oh, only put 20% down. It doesn't make sense. But you can change those numbers that are written on the offer. You can change them between you and your loan officer. That's completely up to you guys, okay? Another big factor, your loan type. Again, unfortunately, FHA, which is a great loan, and if that's your only option, don't feel bad about that at all. It's a great loan. But in a multiple offer situation, I would probably encourage a seller to look at the conventional offer. Another big one, possession. Huge. Typically, here in Utah, we would close in 30 days, right? We would settle one day when we sign all the paperwork, and then the next day it funds and records. That's when the seller would give you possession of the home. Sellers do not like to have to scramble to get out of a home. If you can sense that the seller would appreciate an extra week or 2 after closing, then give it to them. It has been huge for some of our sellers. And if you can show some real flexibility there, it's awesome. Now, more than 2 weeks, you might ask the seller to pay you some rent, and they'd be happy to do it depending on their situation. But think about possession. Don't require a seller to give you possession within 24 hours unless you absolutely need it. If you've got some flexibility, think about that one, right? Home warranties. I'll have 5 offers come in and they'll all have home warranties. Almost everybody asks for a home warranty. But don't be the guy that's asking for a $550 home warranty when you can get a fine home warranty for $350. Or maybe be the guy that doesn't ask for a home warranty and just buy one yourself at closing. You can definitely do that. So be real careful on that. Deadlines in the contract. Here's a huge hot button issue for me as a listing agent. There's no reason why a home cannot be inspected within 7 days. You can get a home inspector out there and you can clear that hurdle within 7 days. It will speak volumes about you as a buyer to have tight deadlines. And it's the same thing about the financing and appraisal deadline. There's a common misconception about the financing and appraisal deadline. People think that you have to have your loan done by that deadline and then you would go to closing. Absolutely not. Your appraisal should be done. That's an absolute. But your financing just needs to be well in hand. It's not going to be done. It's probably just getting into underwriting. But the loan officer is going to give you a nod and he's going to say, listen, everything looks really great here. Don't worry about that. We would let that deadline expire. Now, does it really matter that you close really quickly for most sellers? No, in fact, that can scare some of them. They don't want to have to close too early or too soon. It might catch them off guard. But if your due diligence is really tight and your financing appraisal is really, really tight, then they'll give you as much time as possible to close in many cases. They just want to know they've got a deal. And until those contingencies have been checked off and your earnest money then becomes non-refundable, they're really nervous. So tight deadlines, guys, tight deadlines. So what do you do with the closing costs? I hate to say this because it doesn't always hold true, but in a multiple offer situation, asking the seller to pay all of your closing costs can be a sign of weakness. Now, I know I'm going to catch a lot of flack for saying that, right? There are still buyers who think the seller has to pay their closing costs. Try that in California or many other markets, and it can be insulting to some sellers. Now, Utah sellers don't typically get insulted because they're asking for closing costs. But I want to remind you that if a home is listed for $300,000 and then you're asking for $8,000 in closing costs, that's not a full price offer. That's a $292,000 offer. If you don't want to pay your own closing costs, and I don't blame you, then just make sure that you're aware of what you are netting the seller. Always the net. If you want to net the seller full price, you would have to offer $308,000 with them kicking back $8,000 towards your closing costs. That does not always go over well with the seller, and there's 2 reasons. One is that it may create an appraisal problem at $308,000. The home has to appraise for the sales price, which has just been inflated in this scenario. The other reason is that in most cases, commissions are paid off the gross sales price, not the net to the seller. Okay, so by inflating the sales price, some sellers are paying a little more in commissions. So when we're sitting down with them and working out the net sheets, they recognize that. Ultimately, you should choose financing based on how long you intend to own the home. And I know that's a very hard question to answer. If this is just a stepping stone home, consider having the lender cover most of your closing costs in exchange for a slightly higher interest rate. For example, your payment could be $1,500 a month with the best rate possible if you paid $8,000 in closing costs or had the sellers pay those $8,000. But how about taking a 0.25% knock in the interest rate and the lender pays $5,000 of those $8,000 in closing costs? Now you only have $3,000 remaining. We could have you cover those out of pocket, or we could then maybe negotiate with the seller for $3,000 in closing costs. What does that do to your monthly payment? It might go from $1,500 a month to $1,550, $50 more a month, right? How many months would you have to live in that home paying $50 a month until you reach the $5,000 you saved in closing costs by taking from the lender a slightly higher interest rate? I'm talking like going from 3.75% to 4%. Let's say it takes 100 months. That's almost 8.5 years where you could be in that home. So there is a break-even point, and a talented loan officer, one that has the heart of a teacher, will sit down and show you those calculations. When it comes to negotiating for closing costs, my advice is to remember the seller's bottom line. In many cases, once we find out what that bottom line is, we can restructure that deal a little bit after you go under contract. You can sit down with your loan officer and really form the best kind of loan, the best scenario for you, okay? So maybe that's just enough about closing costs there. Some things really to consider. Escalation clause. Now this is kind of a hotbed issue. We're starting to see more and more of these. We've used them. Basically what it is, a buyer states in their offer that I will beat any other offer by $1,000. We've used them with our buyers successfully and sometimes unsuccessfully. I've now had a lot of feedback as I've presented offers like that to the sellers. Some want to play ball and some are just not interested. And unfortunately, we see a lot of lazy buyers who write a terrible offer and then include an escalation clause and just can't believe their offer wasn't chosen. Remember, a very well written offer that is strong in every way, every other way than just price, can easily communicate that you are the right buyer for the seller's home, and $1,000 is just not tempting enough for the seller to bite, or even $2,000. If you want to use an escalation clause, I would still put your very best foot forward and then add one just for safe measure. By the way, to simply state an addendum that you're willing to pay $1,000 more than the next highest offer leaves you totally unprotected as a buyer. So we've got an addendum that we'll use for our buyers that clarifies and protects to a great extent any of the scenarios. And I can list off a number of different reasons why you would want to have some really good and complete verbiage when using an escalation clause. You just can't rely on a seller calling for a highest and best scenario that would allow you to revise your offer. So I just say put your best foot forward. We're winding down. I don't like to write up an offer until we've had a conversation with the listing agent. There are times when we don't get that opportunity. We've got to get an offer on the table. It might be a Friday evening or Saturday, can't reach the listing agent. But asking the right questions is so important. If this is a home that you've been dreaming about your entire life, then please let us know. Would it really matter in the long run if you offered $5,000 more? Or maybe even a little more aggressive than that? If this is an absolute match of a home, if this is the one, be aggressive. Okay, we're not encouraging you to throw all caution to the wind and be nutso about it. But hey, be aggressive. One last tip that I find helpful. We're seeing this often and have encouraged our buyers to do it. That is just writing a nice, short, brief description about you and your family, maybe your situation, and maybe even a picture, family picture, something like that, and what impressed you about the seller's home. Okay? And if you include that description along with your offer in a multiple offer situation, we've had some sellers that have really appreciated that. And it's a little bit dangerous to do that. We want to make sure that we're coordinating with you on some of those, the verbiage, things that you're going to write in there. But I think it's worth a shot. There are so many other factors that we could share with you as a buyer. I consider some of those trade secrets, and so we're not going to get into those today, but we do reserve those for our committed and valuable clients. We'd love to represent you, obviously. You know, there's never a guarantee that you will come out of a multiple offer situation as the winning bidder. So if you lose, keep your spirits up. Pick yourself up, dust yourself off, get back there in the market. Don't play the blame game. I mean, blaming your agent or blaming the listing agent or blaming your spouse or your dog, it doesn't do anything. It's not uncommon that a buyer loses out on a couple of homes before winning one. And so I'm just a huge believer that in almost all cases, another property will come along and you'll get it at the right time. For those of you who are interested, I just want you to know I will be putting together another video for sellers, how they can handle multiple offers. And I think, as a buyer, you'd probably want to listen to that video and vice versa. Just to end, listen to me. You need the best agent out there. There's never been a greater need for top-notch representation in the history of real estate than there is right now. So give us a call. We'll help you out. We can increase your chances of winning multiple offers. Thank you for your time.